1 in 4 retirees may live past 90 years, necessitating a retirement corpus for 30 plus years. As rightly said by Frank, retirement is not the end of the road, it is the beginning of the open highway. Planning is crucial, yet many neglected, leading to unpreparedness in retirement. In this video, let us delve into questions for a financial planner before retirement and the challenges of an unplanned retirement. Welcome to holisticinvestment.in. Unplanned retirement brings about several complexities like lifestyle compromises, deferred or compromised goals, or financial insecurity or stressful retirement. These complexities stem from insufficient retirement savings, poor investment planning, absence of contingency fund, ineffective portfolio management, and inadequate tax planning. To ensure readiness for retirement and avoid these challenges, proactive retirement planning is crucial. A certified financial planner can guide in creating a tailored retirement plan to achieve your financial goals and eliminate potential complexities. As Robin S. Sharma said, asking the right question is key. Here are some questions to gain clarity from a financial planner and achieve your dream retirement. First, determining your retirement corpus. Your financial planner calculates your retirement corpus based on factors like your current age, expected retirement age, life expectancy, monthly expenses, expected inflation, investment return, and retirement expenses, including healthcare. This corpus should sustain your desired lifestyle for the expected retirement years, which may involve planning for both you and your spouse. Is 1 crore enough for retirement in India? The sufficiency of 1 crore for retirement in India varies based on your lifestyle, expenses, inflation, healthcare needs, and other financial commitments. It is crucial to assess these factors and seek advice from a financial advisor to gauge the adequacy of retirement savings. Next, crafting an investment strategy. Once you know your required corpus, you will need an investment strategy aligned with your current financial situation, including income, expenses, savings, inflation, debts, and assets. Starting retirement planning early, ideally in your 30s or 40s, allows flexibility in achieving your dream retirement. Your strategy should address monthly savings and investments, adjustments to current expenses for saving goals, optimal allocation of surplus funds, tax efficient withdrawal strategies. Next, portfolio evaluation. If your current investments underperform, a financial planner can assess your portfolio's alignment with your goals and recommend adjustments or revamping for better performance. Next, managing loans. A financial planner can advise on prioritizing loan repayment, suggesting that high interest loans like personal loans should be paid off first, with exceptions for certain subsidized loans. It is advisable to limit the total loan burdens to around 40% of income to maintain financial stability. Remember, loans should be used judicially, ideally for emergencies only. For more insights on financial management, you can refer to the article How to Be Savings Friendly in Today's World. Next, importance of medical insurance post-retirement. Securing medical insurance after retirement can be challenging as insurers may reject or charge higher premium based on health conditions. To avoid these issues, it is advisable to obtain health insurance early when you are healthy. If you haven't done so, consult with a financial planner to choose the right policy post-retirement. Key consideration for medical insurance include monthly premiums, deductibles, plan renewal terms, co-insurance, co-payment, and coverage limits. Next, building an emergency fund for retirement. After retirement, regular income ceases, while expenses persist and may increase. A financial planner recommends maintaining an emergency fund equal to 3 to 6 months of expenses to cover unexpected needs like health emergencies or essential family expenses. This fund should not be used for routine expenses but can include provision for predictable healthcare costs. Your planner can guide you on investing this fund for quick access during emergencies. Next, tax planning strategies after retirement. Effective tax planning is crucial in retirement to minimize tax burdens. Your financial planner will advise on tax-efficient investment choices, considering schemes that offer exemptions for seniors. Additionally, a withdrawal strategy will be devised to reduce tax liabilities when accessing investment post-retirement. Next, addressing common retirement challenges. Consulting with a financial planner can also shed light on common post-retirement challenges and how to navigate them effectively. These challenges may include emotional decision making during market volatility, early retirement without adequate financial planning, planning for a shorter retirement period, and overlooking the spouse age in retirement plan. An experienced planner can provide insights and strategies to address these challenges proactively. To know more about retirement planning, read the article 10 Financial Doctrines of Wise Retirement Planning. Next important aspect, assigning beneficiaries for your investments and drafting a will ahead of time, while seemingly a small task, can significantly contribute to your and your family's peace of mind in the future. A knowledgeable retirement planner can guide you through these processes, ensuring they are done correctly and effectively. Also read the article How to Bequeath Wealth to Our Legal Heirs Using Nomination, Joint Accounts and Will. Financial advisors play a crucial role for retirees by ensuring financial security and peace of mind during their post-career years. Here is why they are essential. Tailored financial planning. Advisors access retirees' financial situations, crafting personalized retirement plans based on income, expenses, assets, and risk tolerance to meet their specific goals. Next, retirement income planning. They help create sustainable income streams from pension, retirement accounts, social security, and investments, ensuring ample funds for living expenses throughout retirement. Next, investment management. Advisors manage portfolios, selecting suitable investments and adjusting strategies to maximize returns and minimize risk in line with retirees' goal and time frame. Next, tax planning. They optimize tax strategies on retirement withdrawals, manage capital gains, and use tax efficient vehicles to preserve wealth. Next, healthcare planning. Advisors navigate healthcare costs and insurance options, ensuring adequate coverage without draining savings. Next, estate planning. They assist in creating wills, trust, and beneficiary designation, minimizing estate taxes and probate costs while ensuring asset distribution aligns with retirees' wishes. A strong financial plan is vital for a fulfilling retirement. Ensure your financial planner understands your vision to create a customized plan. Here is our conclusion. Ask questions and seek suitable guidance before choosing a financial planner. Opt for a certified financial planner who provides satisfying answers and ensures your retirement plan meets your expectations. As Mary Astor said, asking questions may dispel uncertainties. Choose wisely and plan your retirement with confidence and satisfaction. A detailed blog post on this topic is available in our website and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming Enlightening Investment Webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.